Hello, if you're watching this video, it's for one of two reasons. It's either because you are a first-time home buyer who is just looking to get an education on what the home buying process is, or maybe you are a repeat home buyer who is trying to get a refresher about the process, or maybe you just want to watch me talk. I am excited to have you, and congratulations if you're thinking about buying your first home. I'll be excited to guide you through the process and to help you find your dream home. So to introduce myself, my name is Lesley. I am a realtor in Minnesota. I work for Realty at the moment. And the reason why I decided to become a real estate agent, it wasn't planned. I started out as a pharmacist, worked as a pharmacist for 7 years, and then I decided that I wanted to start investing in real estate. So in the course of getting that education, I realized that I loved it so much. I was always looking forward to it. And so I started telling people I'm an agent. And long story short, I have worked with so many buyers, sellers, investors, and I actually have a team of people that I work with. I have lenders that I can refer you to. I have title companies that I can refer you to. I have many other people. So if you're looking for vendors or whatever you're looking for, I can find you a good one. Now, as a first-time home buyer, it will be crazy for you to start the process completely blank without knowing what to expect, without knowing how much you need to spend, without knowing how long it's going to take you to go through the process. So my goal for this video really is to come up with something that you can watch. I know there are so many first-time home buyer classes out there. There are workshops you can attend, but it doesn't always work for everybody. So with a video, you can always watch it at your convenience. You can replay it over and over and over, and then just ask me any questions that you have. I may not have the answers, but I know where to find them. So let's dive into this video. When you're buying a home, I usually would advise you to start by either talking to a lender or a realtor who can walk you through the process. But in the course of starting that process, the very first person that you get to work with is a lender. And I have one of my favorite lenders here. He's actually a mortgage broker, Drew, and he's going to guide you through the pre-approval process, what it takes or what you need to do to get pre-approved for a loan. So, Drew, over to you.
Thank you for the introduction, Lesley. I just wanted to first congratulate you on clicking on this video because Lesley is a rock star real estate agent. She's a hungry agent that will work hard for you and do a great job negotiating. My name is Drew Messner, and I'm a mortgage broker with Edge Home Finance. I like to say that I can sell money cheaper, faster, and easier being a mortgage broker. Things that we're going to look at doing this initial pre-approval. It could be the first step is either a 10 to 15 minute application, and then we'd be asking to verify your income, your assets for down payment. So that's things like pay stubs, W-2s, or tax returns if you're self-employed. I like to make this job smooth and easy for you. Working with Lesley and myself will make that happen.
Thank you very much for that introduction, Drew, and for the compliments. Now you can see why I work with him. He's very intelligent, and a lot of time he helps my clients save a lot of money. So I appreciate the fact that I get to work with you. Now, as a first-time home buyer, you need to prepare for the process. There are some people who are ready when they decide to buy a home, and there are others who come to us and then they realize that there are certain things that they have to do to prepare for the process. Two main things: you have to be ready financially, and you have to be ready qualification-wise. Now, when I talk of being financially ready, a lot of people only know about down payment. They don't know that there is a closing cost. And so we just want to give you more information about that. And when it comes to down payment too, a lot of people think they have to have 20%. as down payment for their house. That is incorrect. So, Drew, can you give us more information as to what people can expect to spend for their down payment depending on the kind of loan that they qualify for?
That's a great question. Yeah, the big misconception is I need 20% down. That is absolutely not true. There's FHA is a government program, and VA is another government program. VA is, if you're a veteran, thank you for your service. They can do a 0% down. Also, rural development has 0% down. FHA is generally 3.5% down, but depending on your credit and your profile, we could actually look at down payment assistance. Conventional loans are as low as 3% down. And one of the lenders I work with has a promotion going on where it's 1% down.
Okay. Thank you for that answer. So now you can see that depending on the kind of loan that you qualify for, you may not spend anything towards your down payment, and you may spend as much as 3.5% as a first-time home buyer, unless maybe you're getting a jumbo loan, which is a talk for another time. So another question that a lot of people come to me with, or another concern they have, is that their credit is messed up. They feel like their credit score has to be in the high 700s or 800s in order to buy a home. Can you address that, Drew, and just tell them what to expect or how much, what their credit score needs to be in order to buy a home?
Generally, to do a conventional loan, you want to be at 620 and above. FHA is more lenient on credit scores, so I can go as low as probably 550 on that. And it's not really, I would just encourage you, if you're thinking and you want to be a homeowner, is at least do an application with me, and I can review your credit and advise you on things to do to fix it. The biggest thing to fix credit, if you have additional funds, is to pay down credit balances in relation to the limit. But that's things that I can teach you.
All right. Thank you for that answer, Drew. And if you have any questions about anything that you're listening to, you can always reach out to any of us. If I don't have the answers, I'll ask Drew, or we can ask some other person. Now, when you're financially ready, right, you have the money set aside for your down payment, you have money for your closing costs, and that is another thing too. Drew, can you maybe explain to us how much people can expect to spend towards their closing costs? I know it varies depending on a few things, but can you just give a general idea of how much they can expect to spend?
What's great is when you're buying, so as probably most of this audience here, you don't pay Lesley's commission. Both real estate agent fees are going to be paid by the seller when they sell their house. So typically, what you might be responsible for are the mortgage closing costs. That includes lender fees from my company, but most of those are going to be appraisal, title work, government fees, setting up your escrow account, which is allowing you to include your property taxes and your insurance in that monthly payment. But there's also an opportunity to maybe ask the seller to cover those. Typically, those are going to be around 3% of the sales price.
All right. So there you have it. Okay. Now, a lot of people, one question I get from many people, I didn't know anything about closing costs. What exactly is down payment and what is closing costs? What is the difference? Do they all count towards the amount of money I borrow? Does it reduce the amount I borrow? Or what exactly is the difference? Can you explain that to everybody, Drew?
Yep. So the down payment is going to be required by the loan program that you're trying to obtain. That's either the 3.5% down or the 3% conventional loan, or if you want to put 20%. The total cash to close is basically your down payment plus closing costs if the seller is not covering that. So in an example, if you're able to go FHA financing and you have 3.5% for your down payment, unless you get the seller to cover that additional money for closing cost, you'd typically be looking at around a 6.5 total amount for down payment and closing cost.
So essentially, your down payment kind of reduces the amount of money that you borrow, and the more money you bring to the table, the less your mortgage will be monthly. Is that correct?
Exactly. Great way to put it.
Okay. And then your closing costs, they are more of fees that you're paying for things that are done during the transaction. So we can always break this down to you further, just not to make this a very long video. The next thing that I want us to talk about, Drew, are still during the process of preparing to buy a home and during the process of actually buying that house, there are things that people should avoid. For example, I'll try to list some. If you remember any of them, you can definitely chip in. Like, they shouldn't be trying to get a new line of credit, right? Like to maybe buy a car.
Yeah.
What else can you add to that?
Sometimes I call those the 10 Commandments. There's
Exactly.
quite a few. The biggest ones are, if you decided you want to make this move to home ownership, is once I take a look at your credit, you don't want to apply for any other credit until we get you the keys into the house.
Exactly.
Another big thing is making expensive purchases. You know, if you have some money saved up for down payment, we want to keep that in the bank. Another thing could be changing jobs. You know, when we're doing that, we're having to verify that your current income is based on that job that you applied, not one that we don't know about and you change after we pre-approve you. So those would be the three big ones. No credit inquiries or going and buying a new car. Don't make expensive purchases, and then no job changing.
Yeah, and do not co-sign a loan for somebody. That's another one too. All right. So just to summarize what we've said so far, when you're buying a home, preferably, you can start with a lender too, but preferably you talk to an agent. They will explain the process to you, and then they'll probably refer you to a lender. A lot of times we refer you to a preferred lender because we have a working relationship with them. We know them. We can reach out to them at any time, and they would call us right back. But you can definitely also work with your own lender, somebody from your bank. It's completely up to you. I usually advise people, maybe if you want to compare rates, by all means do it, and then pick the best one. But I'm sure H Mortgage, being that they are a wholesale mortgage company, they definitely have one of the best rates out there. So once you have been pre-approved by a lender, you come back to me and I help you find your house. Me as a realtor, preferably. So I'll set up a search based on what you want. Do you want a single family home? Do you want a condo? Do you want townhouses, multifamily? It's completely up to you. I ask you all those questions. Number of bedrooms. Once I know what you're looking for, I set up that search and send you a list of houses that match your criteria. If you want to modify it, I can always modify the search. And then you can show me what houses you like, and we go out and take a look at them. If you find something that you like, then you can tell me, hey, this is it. We write an offer for it. And then at that point, depending on what the market is, your offer may be accepted, or you may be in a situation where there is competition and you have to compete for a house with others. But once your offer is accepted, then at that point, you have 3 days to put down money that is called earnest money. I don't know if, should I talk about earnest money, or you want to talk about it?
It's like a down payment on your down payment.
I like the way he put it. It's a down payment on your down payment. So what earnest money is, just money that you put down to show the seller how serious you are in the process. So when you give them that money, they're going to take that house off the market and give you time to have that loan processed. So typically, earnest money, most people put down 1%, but the more money, 1% of the price of the house, but the more money you put down, the more serious that takes you to be. So once you put down that earnest money, depending on what we had on the offer, we wrote in the offer, you may require an inspection. We usually would strongly recommend that you do one, especially for a pre-owned house. It could be a 3, 5, or 7 days inspection window. So you do that inspection just for your own peace of mind, that when they inspect it, the cost is on you, actually. When the inspection is done, the inspector tells you problems that the house has or that you should expect to face when you're living in it. And with that information, we can go back and renegotiate with the seller, maybe for a lower price, or maybe they will fix those problems, or maybe you can just back out of the deal too, depending on how the negotiation goes. So in the course of doing that inspection, your lender goes to work at the same time, right? Sometimes they wait for the inspection for you to be happy with the house and want to move forward, and then they will proceed. So one thing that lenders do is that they have to do an appraisal. So Drew, I don't know if you want to talk about the appraisal.
Yeah, so once you get the offer accepted, congratulations. That's the contract to buy that house at a certain price, and if they're paying seller paid closing cost. During that process, you kind of bring me back into the game, where I will maybe ask for updated bank statements and pay stubs, lock in your rate, and get working so we can meet that closing table with a final approval, which is getting an underwriter involved to get your final approval.
So while Drew is trying to get your loan approved, I am in the background just doing some negotiations. I'm communicating with so many people from the title company. I'm communicating with Drew to see how things are going, Drew or the lender we're working with. And there are just a couple of people who are involved in the transaction. But at that point, we are just waiting. And once you get the final approval, then we are moving towards closing. So far, when it comes to money, we have talked about your down payment, your closing cost, your earnest money, your fee for your inspection. Usually in Minnesota, it's about, for the basic or the general one that most people do, is about $500. It could be more, it could be less, depending on the size of the house. And you can also do inspection or test for other things like radon and stuff like that. But it's completely up to you. And then with appraisal, that they do, right?
Yeah, the appraisal would be done after you get the inspection back, saying, hey, everything looks okay with the house, I still want to move forward. That's the only fee generally that we have to collect up front, because the appraiser does not work for my company or Lesley. So they got to get paid up front. Generally, those are about $550 to $600. And what that is going to do is verify that you're not overpaying for the house. It's got to come in supporting the sales price. For some reason, if the appraisal comes in lower, that's the amount we have to lend off of. So we wanted to come in supporting the sales price you're buying and as is.
So that brings me back to your earnest money. That earnest money, I usually say, is refundable and non-refundable. It's refundable during like the inspection window. If during the inspection window you don't like something in the house, or just for whatever reason you decide you don't want the house anymore, your earnest money will be refunded. Now, if your loan does not go through, then you can get your earnest money back. But any other time, if you don't want the house, you just change your mind, you will not get that money back. So I just wanted you to be aware of that. Now, once your loan is approved, we are thinking about closing. So usually when we write the offer, for most lenders, they can take about, on average, 30 days to close, to get everything through. So we usually will request 30 days to close. So from the time the offer is written, in 30 days, you'll be closing on that home. But some lenders are a lot faster. Like I know with Drew, they can close some homes in about, is it 15 to 21
Probably
days?
2.5 weeks to 3 weeks.
Okay, so they are very fast. So if you're looking to close on your home faster than average, it will be, his company is a good company to work with. Now, on closing day or before closing day, they'll probably give you the title company, they'll give you a closing statement.
So we work with the title company, and we all have to balance that final number. So we have a closing representative that's working with the title company, but that title company's got to work with the seller's title company. So we all balance this final document called the closing disclosure. You'll get that before closing, so you'll know how much to bring to closing.
Now, I usually like to tell people some of the things that are included in your closing cost. These are essentially fees that you're paying for the transaction. So when they do a credit check, right?
Credit report fee.
Credit report fee, yeah. The lender's fee is included. Title insurance, title check, just to make sure that there is not more than one owner to that house. There is also some prepaids, and I'll have you explain what those are.
Prepaids are prepaid interest depending on which day you close. So the saying is interest never sleeps, unfortunately. So if you close towards the end of the month, you're basically only having to bring in a day or so of interest. But also prepaids can be setting up your initial escrow account. So you'd pay your whole first year of homeowner's insurance, not outside of the closing disclosure. We'll include that for you. And then a certain amount of money for property taxes, because when you buy a house, your first mortgage payment generally is not until 30 or 45 days. So that's good.
And that gives me another idea, or something that I like to tell people about your property taxes. How much you pay depends on where you're buying. Some cities are a lot more expensive than others. So if you're buying, for example, in Minnetonka, Woodbury, property taxes are much higher. And if you're buying in maybe, say, Ramsey, I'm not too sure, it may be cheaper. So you need to consider that when you're deciding where you want to live in. And other than that, I think we've covered pretty much most of what it is. Oh, Drew, you talked about escrow. That is a word that a lot of people struggle with. What exactly is escrow? Is it money? Is it some kind of an account where money is put into? Can you explain what that is?
So there's two E's. Earnest money we talked about is down payment on your down payment. That's required to send in after they accept your offer to show you how serious you are to buy. Escrow, in some other states, escrow just means closing. But when we're talking about having a convenient payment where your mortgage payment includes property taxes and insurance, that's called escrowing for those items.
Thanks for that explanation, Drew. A lot of people get confused about two kinds of insurance that you may be required to pay when buying a home, right? Some people get confused between homeowners insurance and mortgage insurance. So do you want to explain what the difference is?
There's actually more than two insurances.
Title
Homeowners insurance is going to be required on the house by the lender and the person that's insuring it. It's like car insurance, so you need that to get a mortgage. Title insurance is insurance for you to make sure there's not a previous owner that might have an interest in that property still. So there's owner's insurance that is optional for you to take. You don't need it, but the lender also has title insurance called lender insurance. The third insurance is mortgage insurance, which depending on how much down payment you have, that would be required by the lender.
So that is a summary of what the home buying process is. We may have left out a few things since we are trying to wing it, but with the information you have, you can reach out to us with questions. We are both on Instagram. I am on TikTok, YouTube, and we're just trying to reach out to people in whatever way we can, so that we can give you the information that you need. And you will not be surprised when you decide to buy a home. So let us know what questions you have, and we'll be glad to answer them. Thank you for watching this video.